What's up, mortgage coach community? I am sitting down with Blayney White out of just outside of San Francisco. Where exactly are you, Blayney?
Marin County.
Marin County. So that's just a little north of the city, across the Golden Gate Bridge.
Step off the Golden Gate Bridge and you're in the promised land.
Right on. Yeah, no, it is. It is gorgeous and it is jumbo territory. So,
That's for sure.
So I am really looking forward to this conversation, talking about how to, how do we position it? Save jumbo loans or win jumbo loans?
How to save a jumbo loan, because we've had a lot of clients that have been aced out of offers, lots and lots of competition for the same property. So they may be shopping. In this instance, I have a client that was shopping for a year. And it's a conversation using Mortgage Coach about how to save that jumbo loan, sharing with the client and also with their agent. Right.
Well, obviously, whenever it comes to jumbos, that's not for every family, and that's, different markets have a different jumbo market. Some it's really big banks. Online lenders usually play where in those. Sometimes there's credit unions and local banks. But, as an independent mortgage banker, an IMB, sometimes that's tougher in different markets. And I think in today's market, it's probably, more of a big bank is doing more jumbo loans than a lot of distributed retail. So what I want to do for you guys, my goal is that if you are a local referral-based mortgage professional, I want you to be able to deliver the best possible experience and advice to consumers. And I also want you guys to do the loans. So, Blayney, why don't you tell us what you're doing and how you're doing it? And time out before we do that, because while I know you and I've interviewed you, this is the first time on the channel. So tell everybody a little bit about how long you've been in the business and your mortgage practice.
Oh, awesome. Okay, so over 20 years, can't divulge how many over 20 years, but over 20 years. And I've really always been a jumbo lender since the mortgage meltdown. So it's been a really interesting ride. The conversations are always new and different, but the premise is the same. You've got a very expensive and point for entry into a jumbo market. And how do you help first-time home buyers or people that are buying in a really aggressive market afford to win in this market? So average loan size is around 1.5 million in Marin, which makes it hard to do. It makes it hard for everyone to qualify.
Right.
Yeah.
And what kind of volume do you do in terms of loan production?
About 80 million a year.
Okay.
And I'm also a member of the Corps, a graduate of the Corps.
Good. So you believe in coaching.
I do believe in coaching.
You're a top producer in every sense. I always say there's riches in niches. You have a niche. How do you position yourself as a jumbo expert? I know you have kind of a
So I am the jumbo save it queen.
Jumbo save it queen. I love that. So a great niche for that market. And anybody, no matter what your niche is or you don't have a niche, you can learn from this. And every market has a jumbo. The jumbos obviously in the Marin County is, it's the jumbo of all of America, or at least one of the probably five, biggest market for jumbo lending, but every single market has a high end and a low end. So maybe this will help you guys get more jumbo loans. So why are you a mortgage coach? Why do you use Mortgage Coach?
I love Mortgage Coach, Dave. For me, it is the most important tool for communication with my clients and agents. They learn a lot from Mortgage Coach too. But what I have found is that it leaves little to the imagination as far as clients like to run off with their own idea of what a loan is going to look like for them. And this just lays it out in very colorful black and white so they can understand what are they committing to, how much can they afford, what is happening in the rates that is impacting their buying power and or leverage. And when they wake up at 3 a.m. and they're freaking out in the middle of their purchase transaction, log into Mortgage Coach, don't call me.
And so you love the clarity that it brings, you love the 24 access that it brings. And then it also, guys, it makes some complex concepts a whole lot more simple. and helps you get aligned with your consumer. So let's tell a story of how you've used Mortgage Coach to save a jumbo or help a family
Okay,
get
awesome.
a
Do
home.
you want to see my screen or you want me to tell you
Yeah,
the story?
however,
first?
well, I do want to see your screen. I'll let you decide if you want to share it now or you want to say something before
Well,
you
let
share.
me tell you the story. So I have a lot of clients from last year that started shopping end of third quarter, beginning of fourth quarter, right in the middle of the frenzy when everybody decided they all had to move into a house at the same time. And we started with interest rates in the high threes, low fours. So for the same price home this year, the price is higher and the rates, of course, are 1.5 points higher than they were last year at this time. So I've spent a lot of time working with the agents and the client, explaining to them what they can do. They're pretty hard stop as far as what their monthly expenses and their affordability and what they're comfortable carrying each month in terms of principal, interest, tax, insurance. So I had to get really creative and work with everyone, the buyers, the listing agent, the buyer's agent, and then of course the listing agent needs to talk to their seller to make these plans work.
Okay, cool. Well, let's check it out.
Okay, so let me hop in and share my screen. Here we go.
I'll tell you when I see it. And guys, if you have any questions, if you're watching this live in our Facebook group right now, put questions and comments. I will go to my phone in a minute and pull them in. And if you're watching this on the YouTube channel and you have a highlight that you like, let us know in comments or ask any questions. All right,
Cool.
see your screen.
Okay, so this particular client, rent is also very expensive here in the Bay Area for a family. This particular client pays $8,850 in rent, which, by the way, over 5 years is a whopping $586,000 in rent. So that was a real eye opener, because I think that a lot of people just toe the line and they keep paying the rent because they feel like that's what's affordable. When you actually dive into the numbers and you show them Mortgage Coach on what they can basically save by paying their own mortgage versus what they're losing by paying a landlord's mortgage for them in the form of rent. So last year, we're looking at a purchase price of 2.9 million. Yep, that's an entry level around here. 2.9 million with a down payment of $435,000. The loan amount is approximately $2.5 million. So last year, that would yield a 4% interest rate and a principal, interest, tax, insurance on a 30-year fixed of just under $15,000 a month. Big numbers. I know we're talking big numbers, but this is this market. The agent that they're working with decided that we could not approach, because it was too competitive of a market, and we couldn't approach the seller and the listing agent to see if they could participate with us to make a new plan work so that this buyer can remain in the $2.9 million purchase price, but with a little bit of help from our friends. So if they do nothing, it makes their PITI such that they can't continue to buy in 2.9 million. But if we do one of my jumbo save programs,
Guys,
they can stay at a
marketing jumbo save. And I want to remind folks, while this is, a really high loan amount and purchase price in some markets, completely unrelatable, you can just do the multiple in your market. And, jumbo save program works in every market. It's just the dollar amounts are different. So just keep that in mind. And also just a great opportunity to target whatever the most expensive rentals are in your market. This is a great strategy to go to those buyers and go, hey, do you really want to see what that looks like over 5 years? And it's all relative. This makes sense in every market.
It's true. And I think that, like I said, a lot of buyers really toe the line thinking that their comfort level is the rent that they're paying. But when you spend some time and you dive into the numbers and you explain to them that, hey, that rent is post-tax dollars versus paying a mortgage, which is essentially pre-tax dollars, it makes a much bigger difference in the long run. And they can start paying for a mortgage, which is about the same price as the renter, maybe a little bit higher when you consider how much they save in taxes, up to $750,000 in mortgage tax credit. So the strategy on this one, Dave, was we did a 10-6 ARM, so the new SOFR ARM, and I got the seller to agree to, rather than doing a sale price reduction, agree to sell the property at 2.9 million and give the client 2 points for discount points. And that was able, we were using that, we were able to keep the interest rate within about a point of each other from last year to this year. And you can see that when you extrapolate that over 30 years, the payment is marginally different. And the clients could then reconcile in their minds, yes, I can still buy this $2.9 million house. The reason it was a benefit to the seller is because in this market, a meaningful price reduction is a minimum of 10% haircut to the sale price. So 10% on 2.9 is a really big number. It's $290,000 versus 2 points on the money, which is just under $50,000. And they gave that to the buyer in the form of a credit. And the buyer is now able to afford the exact same house on a 10-year fixed mortgage. I also gave them a couple of, one other example to look at, but you can see it's way less meaningful to go with a 7-year ARM. It doesn't really save that much. And so the right pick is a 10-year fully amortized ARM product, principal, interest, tax, insurance. And the clients are closing actually in about a week. So they're thrilled.
So really you did a combination of an ARM, 10-year ARM. So it's still, 10 years is a long time, and a seller funded concession. So kind of a 1-2 punch: product creativity, seller funded buy down creativity, and you created affordability, relative affordability for this client. And here's the deal, guys. Not every loan officer is thinking about this, and very few loan officers can visualize it and educate it. And remember, when you're putting things like this together, you not only got to get the buyer on board, you got to get the buyer's agent on board, you got to get the seller's agent on board, you got to get the seller on board. So you've got, 5 different groups making a decision. And then within each of those groups, there's a couple people, there's, times 2 to 3 people that are looking at it. So you got 15 plus people clicking on this TCA, getting clarity, getting confidence. And here's the other thing. Think of the value that Blayney is doing. She's wowing a buyer. She's wowing a seller. She's wowing all these agents. So she's able to build this brand as the jumbo fix-it queen.
Yeah. Dave, it was honestly the most rewarding part of the whole transaction was actually having a conversation with the listing agent, because even in this market, list prices are cooling off. They're not cooling off as fast as other markets, but it allowed this agent to be the hero with their sellers and come to them with a solution that saved them hundreds of thousands of dollars just by giving a small seller credit.
I want to show another sample. This was actually from a conversation I had with Jeremy Forcier. We both know Jay Force well.
We know Jay Force.
Yeah, and this was actually, I think we shared this at your sales rally a couple of weeks ago. And this is another seller buy down strategy. And you see that column A was what the house was going to sell for. It was listed for $700,000. Column B, the 10% reduction, is what the buyer wanted to buy it for. And the selling agent told the buyer's agent, don't bother making an offer. It's just too low. We're not going to play ball. And then column 3, seller credit, is Jeremy was able to get the buyer on board and said, well, yeah, we want this price, but we understand we're not going to get that price. So he was able to get them to get behind, look at this, instead of a $451 savings in monthly payment, a $342. And they're like, okay, because remember, guys, when buyers are buying houses, they're buying the lifestyle. And yes, they're buying the purchase price, but they're buying the monthly payment. And so the buyer was able to get on board. And then the seller, they knew that they were probably going to have to lower their purchase price. They just weren't willing to do this much now. And so a compromise happened. And Jeremy was able to be here to buyer, seller, listing agent. And so great strategy. Any other stories or strategies you want to share?
Yeah, I was going to share another one, but I just wanted to bookend that conversation with, I'm always counseling the agents and the clients that every real estate transaction is a negotiation. There was a very short period of time where there was absolutely no negotiation and the sellers were in charge, but it truly is a market where everybody needs to come to the table and negotiate. And the definition of negotiation is that everybody wins a little bit.
I like that. And here's another thing, guys. We're in a market where loan officers the sales fitness is down. Like, we're not used to this. We're not used to having to sell. We're used to like, oh, the rates are that low. Let's go. And agents have had years where they have not had to do price reductions, and listing agents haven't had to negotiate. So they're not used to it. And so when you're a Blayney or a Jeremy, when you're a mortgage coach, you can really add a lot of value to these listing agents right now. And the listing agents, at least from the interviews I'm having with top producers, they're loving this. I mean, like listing agents want to work with mortgage coaches because mortgage coaches can help put deals together. So get out there and tell that story. So what's your other idea and strategy?
So I have a lot of clients that are bridging, because meaning that they need to secure the equity from the property they're currently in, and they want to migrate either up or down in terms of purchase price. A lot of the people here in Marin County typically are buying a smaller house and a smaller footprint, but the price is not much different than where they're leaving as far as value goes. But you've got some tax advantages to moving your tax basis forward with you and vacating a property that may be in a really awesome school district for another young family, and they want to move to a community that's maybe more golf and country club lifestyle with not so great of school districts. So it's really about moving your equity using a bridge. So in this case, what I did was I demonstrated to a client who was really reticent actually to do a bridge. And I said, listen, you've got to give it a chance, because if you look at these numbers, you'll see it's actually not so painful to do a migration. So let me share my screen here.
So guys, move up, move down. Remember, Sales Boomerang will actually give you alerts to let you know who is most likely to be a candidate for moving down, moving up, who needs cash out refis. What Blayney's going to show you now, and I'll tell you when I see your screen, it's really managing equity and managing liabilities. So when a consumer has liabilities and they have equity, if you can be a mortgage coach and you can show them a total cost analysis, it is the best way to help them manage the combination of equity and liabilities.
Absolutely. And a lot of borrowers don't feel very comfortable even engaging in the conversation of a bridge loan, but I tell you, they're super effective in any market, really. So in this example, what I have here is her current, this borrower, she was in a property roughly about $1 million. And she had a lot of equity in it, lots and lots. And she felt like she had a velvet noose because she had a 3.5% interest rate. Her property tax basis was low, and therefore her monthly PITI was really low. And she was going into a passive income phase in her life, but she didn't necessarily want to be in a neighborhood with tons of little kids anymore. She just wanted to move and have a new lifestyle. So we did a bridge loan and we secured the equity from the departing residents and moved it forward to the acquisition of a new property. And I showed her two different options. Option number one, she moved $480,000 forward and kept some cash in the bank and went to work with her financial planner to start investing some of that liquidity, so she had some more passive income later. And then the other one was, she was really adamant when she first came to me, nope, I want to move 100% of my equity all the way into the new property. But when I showed her, in fact, I got on a Zoom and I did this presentation with her agent and her financial planner. Her financial planner chose for her this one. So it was really powerful because now I'm working with that financial planner and he thought this was awesome. He said, look, client, this is a really good strategy for you because I'll be able to take the remaining equity with the sale of your current property and do some different types of investment vehicles for you that will give you passive income down the road. So I use Mortgage Coach in a way that's different than what most people do, which is just showing payments for mortgages. This demonstrates migration, and it demonstrates that in the end, when you land on one of these scenarios, you're going to be in a better situation than you are now. And when you move your property tax basis with you, because you're in the age category of, I believe it's 55 or older, you can bring your tax basis with you. You're not stuck in your current residence. You can go to the neighborhood you want to be in now and still have something that's comparable, plus pull some equity to create some passive income for down the road.
Yeah, now that part for loan officers around the country, that's a California nuance in California, but for everyone in California in the jumbo market, this is pure gold. And just telling these two stories at a realtor meeting is valuable. Hey, could you close this little screen out? Stay on this
Sure.
TPA.
Yay.
And go to the bottom real quick. I want to see the bottom right-hand corner. Now, I noticed you could have, and you didn't, but you could have shown in program 3, putting that money with the financial planner at a certain rate, and it would have had an impact on net worth. Do you ever do that?
You know what I do to earn the love from the financial planners is I ask them to create their own presentation, and they come in with their numbers in addition to these. If they give me their presentation in time, then I'll plug in their actual numbers to this, but I didn't get that for this presentation.
Okay, so just want to remind everybody in that bottom right-hand corner, she's showing that in interest cost, but you can toggle and make that a net worth section. And you could also show like, hey, one program or one strategy is the lowest monthly payment, and the other strategy is the highest loan amount, but invest the difference with your financial planner. And usually I call this a move up analysis, even though they didn't technically move up, they're really just moving sideways. You know, they're like, I'm keeping the same price, but I'm getting a different neighborhood and I'm improving my liquidity. So guys, let's review. If you could stop sharing this real quick, Blayney.
Sure.
So 1, a buyer problem was solved and their dream, to move happened. And my guess is, given this whole exchange, that buyer of the new home is actually going to build net worth and have financial freedom faster. They're going to have the right lifestyle they want with improved financial fitness. An agent got a listing. An agent sold a home. So I'm sure that the same, what was it, the same agent that listed her home?
It was, and that agent
So,
said, hey, wow, you helped me get more business through that.
yeah, so she created 2 transactions through mortgage strategy. I imagine you created a client for life, like this consumer.
I created a client for life, and I created a new business partner in that financial planner.
Boom, she got a new financial planner. And I'll bet you the listing agent somewhere along the line got whiff of all this. They saw the TCA, and who knows, you may have a
still pursuing them.
Okay. But you had a nice touch point. So guys, this is what kind of market this is. This is a market share market. This is where the mortgage coach that can bring this to the market wins. So while Blayney is in a pretty unique market, I hope everybody, no matter what market, no matter what jumbo is in your market, you're taking the lesson from this. You're not like, oh, that doesn't make sense for my market. If you have questions, put them down below. Blayney, any closing thoughts or any advice for anyone watching?
Yes, in this market, we as professionals have to be a value add. We have to be a trusted advisor. We're no longer just selling a rate. We're actually advising on a global solution for all parties involved. And the best way is with a tool, and the tool is Mortgage Coach. So.
And remember, guys, it's sales boomerang and mortgage coach. It's data. You need to have big data and borrower intelligence so that you can get ahead of this stuff. And then you need to have advice-based digital presentations where you're educating consumers at scale, and you're doing it in a way that's valuable for not just realtors, but financial advisors as well. Well, Blayney, you're a great leader. I love your niche. I would love to talk. I don't have time right now, and I don't want to take up, you committed to this time, but the way you've built that niche,
Oh, I'd love to.
jumbo fix-it queen, I would almost love to talk about how you've built that brand. And
Let's do that.
yeah, so maybe if you could forward me all the places where you've built that brand, and we could talk about, okay, you've got this niche. Now, how are you using that niche to get referrals and to get business? You be game for that?
I would love to do that, Dave.
All right, cool. Well, thank you so much.
Thank you. Have a great day.
All right, take care, everyone. Give this a like if you got value. Share it with your mortgage friends and anybody that you know that wants more jumbo loans in the market you serve. Share it. Take care, y'all.
Thank you.